Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis report on foreign exchange markets. I'll start with the euro against the dollar. A second bearish black crow yesterday and a follow-on to the previous session's bearish engulfing pattern. That in turn is as a result of the market failing to break the topside resistances of the middle time, currently at 105.85, of the January to May bearish Andrews pitchfork, backed by the declining short medium moving average, currently 105.94, and the mid-February to date downtrend, currently 106.05. I'd also like to add the April 2017 low at 105.68 to that list. What was especially interesting about the move lower was how it set up the conditions for a possible weekly key reversal down this week. So if we close tomorrow night either below 104.97 or above 105.72, then we'll be on for a weekly key reversal. Currently we're looking, as I say, at a weekly key reversal down. Additionally, another interesting feature of yesterday's action was how prices finally punched down through the recent support area between 104.92 and 104.70. This contains both the February and March 2017 lows at the same 104.92 number. To sum up the current situation, the decline in bearish pressure and stationary support is slowly squishing the market, or squished the market, and has led to a volatile period, much as toothpaste getting too quickly squished in a tube. Now looking below, well, we are in a pretty free zone at the moment until the congestion between 103.69 and 103.38, which contains the lows of June and May, as well as December 2016 and January 2017. So far today, a little lower. The market's capped by the 104.92 to 104.70 congestion band and slowly trying lower. Cable, aka sterling against the US dollar. A second bearish black crow yesterday and a further break lower from the recent May to date diamond pattern. This possible pattern is becoming more secure each day. Tuesday saw a breakout below the lower uptrend, currently at 123.35 of the diamond pattern. We're now following targets, well, we now have the following targets ahead for this diamond continuation pattern. A primary target X1 in the 118.60 area, and a secondary harder to get target X2 in the 115.30 area. Overhead, we have the resistance of the June 2020 low, 122.48, which had been a source of congestion in recent days, plus the nearby upper time, currently at 122.87, the late April, late May bearish shift pitchfork, and entwining it, the falling short moving average, currently 123.69. Meanwhile, below, we still have the May 2020 low support at 120.73. Further down, there is little support bar the middle time, currently at 119.48, until we start hitting targets below. Finally, just like euro dollar, the market has done enough to set up for a possible weekly key reversal this week. So if we close tomorrow either over 122.63 or under 122.24, then we'd be on. Right now we are looking at a weekly key reversal down. So far today, a reactionary move back up to the congestion area at 121.54, but not much else so far, though this might have the makings of a possible tweezer top, two-day tweezer bottom, but we'll have to see. It's a small one if it does. Euro sterling, a significant key reversal down and bearish engulfing pattern yesterday, as the market made a new high, one not seen since September last year. It seems the market was not keen on testing the overhead resistance from the April 2020 low at 86.69, at least not just yet. Below we have the short late May to date upper trend line, that's currently 85.96, as well as the neckline, currently 85.74, of December 2021 to May 22 reverse head and shoulder pattern. This neckline is the extension of the rising upper trend line of the original and extended diamond pattern. Hence, moves around it are important. Looking higher, we have target X. Now, target X in the 86.80 area is the primary target for the recent smaller lopsided diamond pattern, with a harder to get secondary target X1 in the 87.65 area. We also have, for the recent extended diamond pattern, a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. Now for these two diamond patterns, both primary and secondary targets X in the 8680 area and X2 in the 8715 area, well, they've both already been achieved. It is the very large falling wedge pattern, currently 8441 to 8121. Now, this pattern is still in operation. This is one I've been speaking about, a bigger pattern now. I've been speaking for months now. But it's come it's fallen a little bit into the shadows a little recently with the rising prominence of the diamond patterns. And though triggered, it still leaves us with some serious questions. You see, it has the most ambitious upside target of all. Target X4 for this pattern is in the 8865 area, and that is a really big ask. More recently, we've seen action at the previously mentioned neckline, currently 8571, of December 2021 to May 22 reverse head and shoulders pattern. This support is also the extension of the rising upper trend line of the original and extended diamond pattern. A primary target X5 for this reverse head and shoulders pattern would be the 8775 area, and a secondary target X6 would be in the 8660 area. Targets X4 and X6 are currently just off the top of my daily chart. Now, one final item, and it is to recognize the now new possible pattern, that is the late March to date large ascending wedge pattern. That's currently between 8569 and 8763. This is an interesting pattern and one that may soon play a more prominent role. Now, so far today, a follow-on lower to yesterday's combined key reversal down and bearish engulfing pattern. Prices have dropped below the short May-based trend line, but have not as yet reached the neckline below, which is interesting in its own way. US dollar against the Indian rupee. A bearish black crow yesterday, right at the top of the market, and possibly day two and a two-day tweezer top pattern as well. We'll have to see on that one. Interestingly, the range was topped and tailed by the 61.8% projected Fibonacci line at 7907 and the 50% projected Fibonacci line at 7885, and that was below, and the 61.8% was above. Now, just beyond that 61.8% one is the upper time, currently at 7922 of the January to April bullish shift pitchfork, while below is the lower time, currently at 7830 of the Andrews pitchfork for the same move. Looking at the action since the start of May, I have been contemplating which pattern would be the best fit to describe these moves. And the best I can suggest is a bullish measured move pattern. It's not perfect. For example, it slopes too much, I think, too much to the right as well, up to the right, I should say. But I think it's a better descriptor than a rising wedge pattern. Hence, a primary target X would be in the 7967 area, and a secondary harder to get target X1 would be in the 8043 area. So far today, well, a small follow-on lower to yesterday's bearish black crow, but the fall has been held up once again by the 50% projected Fibonacci line. US dollar against the Brazilian real. An immediate countering bearish engulfing pattern yesterday as the market finally gave up trying to batter its way up through the combination of the middle time, currently at 527.96 of the April to late June bullish Andrews pitchfork, the flatlining long moving average, currently 524.66, and the 50% Fibonacci on the March 20 to April 22 move at 527.37. In the process, prices dropped and closed below the interesting 50% Fibonacci line, the March 21 to April 22 move at 522.76, and the congestion at 520.27. Now, this is a setback to the market reaching target X at 524.85, which is the target for the start of April bullish halfway hesitation. It is not a perfect one. It's not a perfect one at all, but it is still there. Now, looking below, we have a fairly free zone until the 38.2% Fibonacci on the June 2019 to May 2020 move at 510.93. US dollar against the Mexican peso. A higher, yet still indecisive spinning top yesterday. The market still managed to stabilize over the middle time, currently at 1997.95, with a broken November 21 to March 22 bearish shift pitchfork, as well as a slowly rising short-medium moving average, currently 20.0381, and even managed to breach but not close over the slowly declining medium moving average, currently at 20.1743. Now, looking overhead, beyond the medium moving average, we have the flatlining long moving average, currently at 20.4165. So far today, Well, a slightly higher open, a seemingly significant move higher over the medium moving average, but not much else than that. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights AD Tofpik and ADM Investor Services International Limited. And here comes the final bit.